Major support for these broadcasts is provided by New York Community Bank, Chase Commercial Term Lending, Chelsea Lighting, Capital One Bank, Perfect Building Maintenance, Genova Burns, Giantomasi and Webster, Kilroy Architectural Windows, New York's Window Company, the Wyckoff Group, Greenberg Traurig, LLP, M&T Bank. Additional support is provided by Ackman Ziff Real Estate Group, Bank of America, Merrill Lynch, Briarwood Organization, Bruce Mosler, C.B. Richard Ellis, Colliers International New York, LLC, Cushman and Wakefield, Dime Savings Bank of Williamsburg, Douglaston Development, Levine Builders, DDG Partners, Friedman LLP, Accountants and Advisors, Flushing Bank, Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, James Orphanides, Centurion Holdings, John Katsimatides, Red Apple Group, Madison Realty Capital, Margolin Weiner and Evans, LLP, Certified Public Accountants and Business Advisors, Massey Knackle Realty Services, New Banks, Meridian Capital Group, Newmark Knight Frank, Sterling and Sterling, SJP Properties, Stonehenge Partners, and these friends.
So unfortunately, we had a serious hurricane. Her name was Sandy. We then had a nor'easter. I don't know the name they gave that one. But where do we stand today? We're here in November of 2012. We recently had an election. We have tax questions. We have a variety of questions. And where do we stand in the region with regard to the market, to the office market, to the residential market, to how lenders look at it? So today I've been fortunate to assemble a very great group of individuals to provide their thoughts and insights on how the world is today. My guests include, from the Garden State, Frank Giantomasi, who's the senior partner at Genova Burns, Giantomasi and Webster. A kid from Brooklyn like myself, but who lives in Manhattan today, the executive vice president at Cushman and Wakefield, Glenn Markman, also the proprietor of Della Rocco's and the Heights Cafe. From Setauket, Long Island, the other part of the state, Jim Coughlan, who's a principal at Tritec Real Estate Development. And last but not least, the man who gives money to people in these times, Peter Darcy, who is the area executive at M&T Bank. So since you came, now, lucky that, did you take the path? There's no path.
I drove in.
You drove in.
Drove in slowly, but I drove in.
You drove in slowly. You know, fortunately, the Holland Tunnel is open now, you know, and there are situations. How bad is the damage in New Jersey, and how difficult has that had an effect on the business and the real estate climate from what you see? Because you guys are very involved in the entire Garden State.
Well, you know, you start in the south, Monmouth County coming up, devastation, biblical devastation. Residential primarily, not really much in terms of commercial real estate, except for the retail that was out of business. You hit now and you get closer into Hudson County, Hoboken, 1 week of solid out of business. Jersey City, there are still major buildings that are without utilization, relocation. Legal and Communications Center in Newark took 8 feet of water off of the Passaic River.
Do you think, I mean, you guys are, you're headquartered in Newark, you have a sub-office out in Jersey City. do you this is not going to change? You're going to keep your office in Jersey City. You're not going out to Randolph, New Jersey,
No.
or Morristown, New Jersey. I mean,
we're gonna dig in and make it better, and we're gonna fortify, and we're gonna make sure that we use every opportunity we can to help everyone to reestablish. Now, there's going to be some difficult times ahead. I think small business is going to have a much more difficult time reestablishing than big business. They don't have the lines of credit, they don't have the resources, and one thing that I'll tell you, Michael, getting a contractor, getting a subcontractor today in New Jersey is a difficult proposition.
So since I'm not skilled at that, I should learn. I should learn how to go to Home Depot and buy myself some tools and do some work.
Hammer and chisel, and you'll do very, very well, I think.
Okay. So, Mr. Brooklyn, you know, Barclays Center, you know, Metro Tech, Cold Pizza over there. Brick Oven Pizza. You know, I don't want, you know, it's a little plug for Del Rocco's, even though we don't have any products over here today. What's happening in Brooklyn? How do you see Brooklyn today?
Well, you know, Brooklyn and you know, really Lower Manhattan, because I think that's probably the biggest issue, because in Lower Manhattan you're talking about a marketplace about 85 million square feet, and somewhere around 35% of that, or 30 million square feet, was impacted by Sandy. So day by day, more and more product is coming online, but it's very complicated. Brooklyn was fine for the most part. Dumbo suffered a little bit.
As an entrepreneur, did your restaurant suffer?
No, we were okay in the Heights. We're fortunate that the Heights handled it pretty well. But you know, getting back to, you know, the commercial side in Lower Manhattan, you know, you're talking about resources, you know, from Cushman and Wakefield and other large companies, other developers who can mobilize, who can bring in staff and bring in people from the Midwest to pump out basements, to fix the systems. So on one hand, the larger companies are able to do this stuff. It's those small entrepreneurial businesses that are impacted here, the small retail, the small nonprofits that are really struggling. And don't get me wrong, there's a lot of companies every day.
But here's my question, and it's also for Jim over here. The office market this year still has been better than it was 2 years ago, because last year was a great market. Right. But the office market had slowed down a little bit. Mm-hmm. Now, you know, and then there were other circumstances, you know, as we were saying prior to the show, the European debt crisis, an election. Now we have the election. Now we have taxes. I don't see people signing leases saying, I need that office.
No, the urgency is not there. And, you know, there seems to be a different issue that's come up to prevent transactions from actually closing. And it seems to be that, you know, the pipeline is still, you know, pretty good. It's just getting these transactions executed that's a little bit of a struggle right now. And I think, you know, what's going to happen is these deals are going to push into December, probably push into early 2013. Hopefully there will not be something else that we haven't even identified as a problem in 2013, but you can count on something happening, because it always does. But transactions, you know, leases come up, they need to be signed, tenants need to conduct their business.
The general counsel, Francis, would sign the leases. He'll represent his clients. There's no question.
The one point, I think we really all owe a big thank you to all the people in property management who got these buildings back online. People who were working, keeping a cot in the basement of buildings to keep this infrastructure going and getting these things up, because this has been a real struggle, and it's the Brian McCanns and all the people who live for these buildings, and it's
absolutely.
And one of them, you know, is Jim. You have buildings.
We have buildings.
How much office space do you have out in Long Island?
About 1.25 million feet. But taking the point that Mark's saying, you know, the people that were out there in the storm. We have a 100-year-old building we just renovated in Patchogue as part of a larger project. It was kind of the first phase of a larger project, and it's an old roof that we'd redone, and it's an old structure, and a piece of it had blown off in the hurricane. Now, thankfully, we didn't have a lot of rain in the hurricane, But there were guys out there with you know, corrugated metal, swinging it around in the middle of the hurricane to shear that up and make sure that they got a temporary structure in place. And it really is, I mean, of course, that's not a life-threatening situation, and there were so many people that did do things to protect life,
Now, what's
protect property that were just
you
really
have two
unsung heroes.
developments that you're working on right now. How are they going to slow down, or is, like Frank said before, you know, the contractors are going to, you know, we'll do the work if we can get paid more?
Yeah, well, the projects that we're working on right now that are under, you can't justify building a new office building on Long Island right now. I mean, they're worth less than they cost to build still, and the rents don't justify new construction yet. The project that we're working on are mixed-use projects where there's some retail, neighborhood retail with a significant amount of multifamily housing, usually around a transit, in both cases around a transit hub. The Patchogue project is about 1,500 feet from the train station. Got a ferry over to Fire Island, which thank God is still there. The National Seashore Park is still there. There's not a village that it was going to. And the village itself fared pretty well. I mean, it got flooded up to south of Montauk Highway, but the project that we have is right now a village block that's a hole in the ground, and it didn't fill up with water. It's still moving forward. And you can certainly justify on Long Island new multifamily housing before and after this hurricane. I think after the hurricane, the demand's even going to increase more, but we only have about 18% of our housing stock is rental. Now it's a 2.8 million person market. The national average for housing stock is about 35% rental. Obviously, with the push towards home ownership since the Clinton years, the home ownership rate went up towards about 69% in the country. Everybody sees that coming back down into the mid or low 60s. Well, Long Island has been in the 80s, and it really, the demographics have shifted to where, our typical family 25 years ago was 2 adults with kids. 25% of our households now are 1 person. And that's the extremes of it, but our demographics have shifted tremendously, and we need a lot of rental housing.
Now, since you're the banker, you're in the market, you're New York City, Long Island, over here. How do you see the world today? What is the bank? And I mean, M&T are very dear friends and a great bank, and in a couple of months, I think it's April, you're going to have this major little presence going into your state. Hudson City Savings, so they're going to even be larger over there. How do you look at, how was the bank's reaction to the hurricane, to the economy, to all of this? And then we'll talk about specific asset classes and thoughts.
Sure. They're 2 separate buckets. To put it in perspective on the storm, we're in the middle of a number of development projects, and there are some that are in early planning stages still. There are some that have time to redesign. We're clearly more focused post-Sandy than we were pre-Sandy on flood insurance levels, although we were always good at requiring flood insurance when they were in flood zones, and that came in handy this storm. And also, what type of design features are owners of, say, high-end condominiums going to require? Is this going to be something that becomes on the radar from a marketing standpoint? Things like that. Those are questions.
You bring up a very interesting. You brought up prior to the show, we were talking about one of your developers, a very prominent developer. Are people going to feel comfortable? And this was, I'm not sure if Glenn brought it up also. We were talking about after 9/11, how many people wanted to have their office very high in a building.
On a low floor versus
On a
a
low
high
floor.
floor.
You're talking about what happened on 57th Street, which was nothing to do with Gary Barnett or nothing to do really with Lend-Lease, was an act of God. When the crane, will people change their mind on the heights? Do you think sales will be reduced? Less people will want to be up high? Because they had to walk downstairs in many buildings. I'm not talking about...
I think to that degree, in terms of power, in terms of walking downstairs, I think more people, if they're paying $2,500 for an apartment, are going to expect, if the power goes out, that there's a redundancy in the building, so that they don't have to walk down the stairs, and so they could use a toilet, if they have to. There are also things like geothermal backups. There are a whole host of options that I think developers are starting to think more about. Also, where they locate mechanicals, also how they seal mechanicals in lower floors of the building. These are all things that are getting a lot of focus, and it's a mix from developers that I speak with. It's a little bit of a mixed bag. Some people think that this is not going to be the long-term impact in the consumer's mind, and in general, this was a really big storm, and it's not just the start of a pattern.
You know what? So why don't we? I have three people here. What do you? I'm asking you. Do you think this is going to have if you were building a new home, and your home in Spring Lake wasn't destroyed, but if you were thinking about that, what would you be thinking about with regard to?
I personally think that right now, if you don't have a gas-powered generator, a natural gas-powered generator, it's going to be a deduction in your appraisal value of your home. And
Mine's getting delivered today.
There's no question about it. A Home Depot in Montville, I stopped in there during the storm, and they had all kinds of marketing out there, free home estimates for your natural, and the first thing as soon as you walked in, on display. And then, like a good Mercedes dealership, they had a Mazda line that you could buy, and they had a gas-powered, kerosene type of a fuel, and it's a little cheaper. So I think it's going to become standard. I think it'll become just as normal.
I think what Peter is saying is, it's like right after 9/11. This is an immediate effect. 6 months from now, will people say, "Oh, I don't need the
no,
gas
I think,
generator"?
Michael, I think people will remember this one. This is a one-off, but this is a landmark because this whole big focus on global warming, and is this the follow-up to last year? Don't forget, last year we had a terrible year.
I mean, Jim brought it up very well. We were talking about what happened in 1938 in the hurricane, the Great Storm, which took out most of Dune Road and West Hampton and other parts, that this could happen again.
Sure. I mean, you look at any model that LIPO or any of the not-for-profits that track this stuff are pointing out, they'll say that we are due for at least a Category 2 on Long Island. And this wasn't even a hurricane that hit us. And that model would bring the flooding much further north than what we experienced.
I spoke to an architect to get the other side of this who's designing some of these features for buildings today, and they have a global business and a well-known architect. And I asked him whether this is in their estimation, a short term. They have to design for this to be the new normal, and in my opinion, you do. That's what I think.
See, I'm like the Three Little Pigs. You huff and you puff the straw house. Give me the brick. I'm like the guys in Deal. The guys in Deal. Forget the brick. It has to be brick. It has to be concrete. I want that.
Let me tell you what he said, though. He said that in his lifetime, he doesn't think a submerged transportation network like a subway is going to be feasible anymore, and that is something that in a few decades, if you look at the degree by which the water table is rising, and at least in their perspective, that the city needs to think through infrastructure or these flood barriers and the gates and all the tidal barriers that are costing $40 billion. I saw the estimate, but that they're going to have to take trains and raise them above ground.
You're a publicly held bank. You're a very good bank. I'm a shareholder, and I want to make sure that you're not lending inappropriately. What should you be doing if you're lending to him or some of his clients? I mean, how do you become more prudent today in light of all these conditions?
You have to have a couple things, and to put in perspective, this storm, which was a nasty storm, our commercial real estate portfolio, which is about $6 billion in the New York City market, we had only 7 properties that had any type of severe damage to them, which is a lot, but for a total of less than $100 million out of that. So we have a fairly representative portfolio across the city in different areas. It puts
No, I'm not talking. I'm just asking the conceptual idea.
I think it's about insurance requirements. So we in the past required flood insurance in flood zones, and we went with it typically with the FEMA minimums, which I believe are $500,000 commercial, $250,000 for residential. But that's something we're evaluating, and I think to what degree there's new developments that are being built, or we're making sizable loans and not having very lumpy large positions as part of how you mitigate risk around this, but looking at the viability of buildings to operate long-term that are in heavily impacted areas where this happens again. We do have some exposures that are still not up and operating, and it could be months for them to get back into business.
Michael, if you look at the average age of buildings, office buildings in Manhattan is 79 years old. the 177 buildings that comprise this 85 million square feet that I talked about in Lower
I'm
Manhattan.
really impressed with the statistics.
The 107, the average age of those buildings are 55 years old. So, you know, it's a little bit less than the overall average, but, you know, these buildings once you have this damage done to the lower portions of the building, to the elevator pits, to getting the parts for something that's 55 years old, there's a lot of scrambling, and that's part of the dilemma of getting these things up. And yet every day another building or two or more are coming online. The big issue is Verizon right now and getting phone service to the buildings that are even up.
Verizon's good. Look at LIPA. I mean, certain people, the guy CEO resigned, but the conditions that happened with LIPA and the other utilities. I haven't heard too much people knocking Jersey Central Power and Light.
JCP&L did a great prep job because they were so criticized with the last year's storm. The same type of LIPA, clamor was there. So they came in and they were well prepared for this one. They brought crews in ahead of time, and I will tell you that Chris Christie, the governor, did a great job of preparing.
I think
Jersey.
as Glenn
we were
said,
talking about
as Glenn said earlier to the show, Christie did a fantastic job, Mayor Mike did a great job, and Cuomo did a great job. So you really had a lot of interesting situations over there. Now let's turn it a little bit. We've spoken a lot about the hurricane, but we've had an election. We have one election. We have a new election next year over here. We have taxes. We have other things. How do you see that having an effect on the real estate market over the next year or next 6 months? Jim?
Well, I think the election was a huge thing, and as we mentioned before the show, that does give a sense of clarity. At least it gives you some idea of which industries people will, some believe healthcare will benefit from the way the election went. Some believe that Wall Street might get hurt a little bit by it, but at least it provides a little more clarity. Where what came out of it, though, with the bickering between the politicians, was the height of the fiscal cliff. And
yeah, but if we spent if they didn't spend $900 million, we could have less taxes and other things. The cost of the advertising campaign.
That's probably true.
And nothing changed.
And nothing changed,
right.
But if you look at our industry, I think that there's been people holding off on hiring just like they've been holding off on leasing space. If you're looking at launching a decent-sized business endeavor and you've got the uncertainty of the European crisis and the election and the fiscal cliff, at least a couple of pieces of those seem to be, well, obviously the election is taken care of. The European crisis is not at least in the front page as much as it used to be. Now you've got the fiscal cliff, which they've got to get done. I mean, it's a small probability that they won't, but the idea that they don't is such a calamity that people would still hold back. If you had 50% of your portfolio in cash today, would you say it's time to put it all in? Probably not. So the same is true on somebody making a decision to invest in a new business venture. So that'll hold back job growth until some of that clarity.
You bring up a very good point. And in addition to being a very successful office leasing broker and owning some very great restaurants, Glenn invests in apartment houses, and so does Frank, and he lends on those, and so do you. Where do you see the investment sales market today? Do you think, with this uncertainty, I did a show a week ago and I had 4 investment sales brokers, which sometimes would be dangerous because they're sales brokers and that's their business. And they said that the market is still there. People have this gun, they want to own residential rental apartments, things.
Well, what's your alternative? You're going to put your money, where are you going to put your money?
I got it in the mattress over here.
It's probably
have
the
to
best.
live somewhere too.
Yeah.
Well, don't you have, you say it better than I at M&T, but aren't we now getting to the point where the cost of rental and the cost of ownership are starting to level off? And historically, when that happens, doesn't the market shift to ownership away from rental?
Yeah, and the level of equilibrium in terms of inventory and absorption is starting to change back. So there was a huge surge post Lehman and everything. All these projects that got financed had to get purchased. That happened. Then there was nothing built, and now there's finally pipeline again, but we're still well below historical numbers on the residential for sale. And most of that, a lot of that is really high end. So affordable housing, and there's a housing crisis, and this, there are a lot of units that got taken out with Sandy that aren't going to be up for a couple of months. There's a couple big buildings, and the vacancy rate is so low that there's not much.
That's investment sales for residential, because that's been an asset that people love. What about investment sales towards office?
The Midtown South office product, you have some people like Albany's building a new building.
But the Midtown South, as Glenn brought up prior to the show, is such, there's no vacancy. It's really a small market. I'm talking about, there are certain office buildings that are for sale in Midtown. There are certain, even in New Jersey, there are certain office buildings. I don't feel that the enthusiasm is really there, that people are jumping for an office building today.
In Jersey, I will tell you, you're accurate. There isn't a lot of demand for office space. Offices continue to contract as tech catches on. We talked about the cloud before. A year ago, you didn't hear too much about the cloud. The cloud has taken the need for office space and made it much, much smaller.
And the cloud has also been very valuable on cloud computing, because you don't have to worry about floods on a cloud computing.
My son-in-law is an attorney, and he works for a large pharma company, and they now mandate that he spend 1 day a week. He's corporate counsel, 1 day a week at home, working from home. They mandate that.
Yeah.
So what does that tell you? They're shrinking the need for office space.
I mean, you see what's up for sale in Long Island. Is there any office buildings really for sale?
There's no, the investment sales market has been dead on Long Island for a while. I mean, you're not, unless you're forced to sell, you're not going to be selling into this market right now.
Because as I'm not sure who said it, you'd be selling for you said it.
You're selling for less than it costs to build.
Cost to build.
Yeah. So eventually, if you just hold your asset, in theory, as job growth does pick back up again, and we've had decent job growth on Long Island. We've had okay.
New York is still a blue chip place to invest in real estate. I mean, I don't see.
He's from the Garden State.
Right.
Understand? Yeah.
Right. I think the biggest problem we have in New York City is who the next mayor will be. That is the number one challenge.
And you know what? And there's a question with regard to that. That uncertainty. We have a lot of foreign investors. You have people coming over here. Furter is a big situation. Which is investors, because you have to do less than 50%. And then you have, we were talking about carried interest over here. These effects have an effect on people's investment. Uncertainty, the one thing is certain, you have Obama, the situation, but you don't have other situations over there.
Well, London, I was in London for the Olympics this summer, and London real estate is trading at about double the true market value, and it's all about security. People in Europe are flocking to London because of political security and economic security. That's why I think New York is going to always be a blue chip location. There's just a level of security in New York that you can't find elsewhere. Now, I've got to give you the commercial for Jersey. It's still a great place to move. Our friend at SJP is coming out of the ground in Hoboken with a brand new office building on the waterfront, because he's got tenants and he's got.
You just said the ultimate comment. He has tenants. He's not building spec, because my friend Mr. Darcy would never lend him or anyone else money on a spec building today.
There was a spec building that got financed, though, post-crisis, Minskoff's building downtown. So it has happened.
Boston Properties building.
Boston Properties.
They're a REIT, so they
right.
It's a different category on a REIT.
Well, we hope
but in
Jersey,
general, that's true.
We hope that people have rediscovered us again and want to come back to Jersey City and say, let's take a look at it again, the financial market.
Wait a second, you have the Super Bowl this year. Come on, let's
2014.
You have the 2000. I heard that you can't afford a ticket to go to the Super Bowl.
Very difficult, but I can help you with that.
Of course, it's always great to have a guy from Hudson County to discuss that. What about retail?
Retail's very slow in Jersey right now. The malls continue to lose tenants and gain tenants, but it's just a trade. There's no growth. There's no expansion. So that's what we're seeing. There's a lot of retail being built that's not being leased out, but it's part of a mixed-use complex where you've got commercial on top, or you've got residential. The new Marriott Hotel occupied, but nobody wants the retail.
Look at Madison Avenue, just as opposite end of the spectrum. You have the value play to Fifth Avenue.
I know. I really feel that the four industry specialists have provided me and my audience with some great insight. I'd like to thank Frank, Glenn, Jim, and Peter, and I'll see everybody next week. Thanks again.
Thank you, Michael.
Thank you, Mike.